So thus far we have looked at how to use support and resistance and candle lines and correlation to give us entries, stops and targets. The other major advantage of support and resistance is that it can keep us out of losing trades. For example, this is a British pound on a 4-hour chart. I was trading with a student this morning and he was interested to long around about 59.70. And we decided at the end it wasn't such a good idea because 160 on the pound is a hugely significant major psychological area, as well as being a whole number and an area where price has previously reacted. Therefore, to take a trade when you only have a potential of 25 or 30 pips profit is not a good idea. Now that's not to say that this will not break. But until candles close and break above, then you have to think in terms of the strong probability that price is at least going to react there. Now, as it happened so far today, it has done. Price came up to 6,160 and bounced down 50 odd pips. Those of you looking to counter trend trade would have had you stop just the other side of 160 for this move and a potential gain here of 50. This is known, it's more obvious when price is going back down in this area, but it's known as a dead cat bounce because often price will come down, it will bounce off and then come back down again. So what may well happen here is eventually this pound could break, but until it does, probability would keep you out of a losing trade. Equally, in the same discussion with the same student, we were looking at a potential short of the dollar CAD. And there were signals on the 15-minute charts that looked good for a potential trade. But when we looked into this in greater detail, 99 was obviously a major area of previous support. And therefore, to take a trade, we were around here, to take a trade with a potential of about 5 pips victory and with a 20 pip stop loss is obviously not a good idea. So on those two occasions, it has at the moment kept us out of 2 losing trades. Now further on in the course, we will go through and show how to deal with price when price breaks out. But what you need in these instances, we always look for price to break and close, the candles to close through these areas. So going back to the pound, if we are to long the pound in its current position, we would wait for price to break through, close, pull back with a view for a long. Whilst I've been recording these videos in the last few days, I've suddenly been reminded how important candlesticks really are. Now, I showed you the other day in detail why it wasn't a good idea to long the British pound here, because we were so near to 160. But all counter trend traders will have been looking to short here anyway. So what would be the clues? Well, here on a 4-hour, the only clue you had really was this spinning top candle. So that's major indecision at the end of a move. But we haven't really got a major indication to short until price gets down here and has already moved about 50 pips. However, when I trade a daily chart, I often go down to a 4-hour to check for entries. And similarly, when I'm trading a 4-hour chart, I go down to a 1-hour. And if you go to a 1-hour chart, what do you find? We had 2 opportunities for 2 almost perfect pin bar reversal candles at 160, which would have got you in somewhere around 159.80 rather than waiting for the 4-hour. So that was a winning trade simply from candlesticks and support and resistance. Equally the Euro USD. Here, the other day we were looking at previous areas of support and resistance, and 33.65, if we scroll back, has been important. You can see here, early February, the price came down, touched it to the pip on a number of occasions. Here it was resistance, broke, became support, and therefore that was an obvious area of interest. On the 4-hour candle here, we had a clue that price could go short. We had another clue, we had spinning top indecision, so lots going on in this area to give us a clue for a potential short. On the 1 hour, you had about 10 hours to take this trade. you have price coming up and touching, reversal candles, indecision candles, big reversal candle, indecision candles. Lots of opportunities here over a 24-hour period of time and reasons to short the euro at this point. A further confirmation was the Swissy. The Swissy at the same time, when I showed you in the video before about potential areas for targets and things, 90.20 was a major previous area of support and resistance. So just as price has come up on the Euro USD and stalled and hesitated, it has done exactly the same on the Swissy. Here we had price just above the all-important 90 whole number, and again you had opportunities here on the 4 hour. On the 1 hour you had once again a 24-hour period of time when price was clearly moving sideways and was indecision candles all the way along this area. Finally, the CAD. I showed you the other day why we weren't looking to short the CAD at this area, because it was so near to 9900. What did the CAD do? It bounced back up and it's now on its way back up, hopefully to 9990. 9990 just below the all-important psych level and the parity level of 100. I will be looking for clues to short here once more. CAD is currently trying to break the upper area of 100. We can see here on the 4 hour chart that we currently have no clues as to a potential short, a big green bullish candle. And if we go down to the 1 hour chart, we have the same scenario. Price is struggling, but we need candles to close and then a reversal candle to take this trade. Where will we be thinking of a potential target? Well, hopefully by now you will realize that 9900, 9910 will be the area we will be interested in. In these first few videos, I have shown you how to use candlesticks, horizontal support and resistance, and correlation to take trades. These markets have been going sideways for the last few days, and therefore horizontal support and resistance is relevant. However, often the market is trending, i.e. it is either going up or is going down, and for that we need to study and learn how to use trend lines and channels, which I will show you in the next video.